Take a look at this chart. It shows us the comparison between the euphoria of the AI bubble in 2025 with the Bitcoin bubble of 2017 and the housing bubble of 2005 using Google search trends. What's particularly interesting about this chart is the dates of these peaks. August of 2005 coincided precisely with the moment the housing market began to roll over. And this spike for Bitcoin occurred in December of 2017, the very month where Bitcoin peaked and proceeded to drop by 80%. Today, the interest in the AI bubble is now exceeding what was seen in those instances. Michael Burry, the investor famous for having shorted the housing market in 2007, has recently revealed he is shorting two of the most AI-related stocks in 2025. There is a reason for why risk in the AI market has just increased substantially. Data center construction spending is now set to overtake office construction spending, a trend that really began to take off after ChatGPT was released, as investors began to front-run skyrocketing demand for AI infrastructure. But data centers are just a small fraction of the entire AI industry. Semiconductors, Tesla robots, large language models, AI military contracts. There's a whole frenzy of different kinds of sub-industries within the artificial intelligence sector, and not all of them are considered equal in financial markets. And some of these currently have substantially more risk than others, and as we're going to see, the popping of them could very quickly spread out to the rest. In 2025, AI stocks have been one of our big profit generators for our trades at bravosresearch.com, taking advantage of double-digit gains on stocks like ACMR, ASML, Google, SMSCI, KLAC, IBM. These helped us achieve 48 winning trades at an average gain of 14.9% against 30 losing trades at a loss of just 3% in just the third quarter. That seals yet another very strong quarter for our trades at bravosresearch.com, comfortably beating the market. If you want to have access to all of the entries and exits on the trades that we make in real time, make sure you do not miss our Black Friday offer. It's a 40% discount on our service. We will not be doing a discount like this again until a year from now, so make sure you don't miss it. We can't guarantee that we'll continue to post returns like this, but our entire mission is to make sure that you make money in the market. Now, although AI stocks helped us in the third quarter, we're now being much more cautious in the fourth quarter. Let me explain. The AI industry can be split into three categories: AI infrastructure, AI implementation, and AI spending. Within AI infrastructure, you primarily have semiconductor stocks like Nvidia and AMD, and you also have data center stocks like Oracle. These are the companies that have essentially been selling the shovels during the gold rush. Within AI implementation, you have stocks like Palantir, Tesla, but also private companies like OpenAI, Anthropic, xAI. These companies are at the forefront of AI technology and have business models that are actively implementing it. And finally, the AI spenders, big tech firms like Meta, Microsoft, Google, they have business models that have essentially nothing to do with AI, but they are spending billions on the technology to figure out how they can use it. They're the players that are turbocharging the other parts of the industry and responsible for absolutely massive inflows of capital into the other two categories. So which segment is about to pop the AI bubble? A lot of people point to AI infrastructure as the biggest risk. A recent study from a Harvard economist showed that infrastructure spending accounted for 92% of GDP growth in the first half of 2025. If it had not been for data center and semiconductor spending, economic growth in the first half of 2025 would have been 0.1%. Additionally, we've just seen Nvidia grow to represent almost 8% of the S&P 500 index, an absolutely ridiculous level of concentration for a single company, and is absolutely unparalleled by any other stock in history. Now, while these are not exactly great things to see, they're also not the definition of a bubble. A financial asset bubble can be defined as the deviation of market expectations from fundamental reality. And believe it or not, that's not actually what's happening with AI infrastructure stocks. Demand for data centers and semiconductors is very real and is translating into actual profits and earnings for these companies. From our research, AI infrastructure stocks like Nvidia, AMD, Oracle have an average price to earnings ratio of 53. So in other words, if these companies stopped growing today, it would take 53 years for investors to make their money back. Yes, that is pretty expensive, as it's almost twice the price to earnings ratio of the S&P 500, but it's actually nowhere near the valuations that tech stocks reached during the tech bubble of the late 1990s. The average stock in the Nasdaq 100 in March of 2000 had a PE ratio of 196 before dropping by 80%. And many of these companies had absolutely no earnings, so price was completely disconnected from reality. That is not something that we can say about AI infrastructure companies that have seen their earnings skyrocket over the last 2 years. The AI spenders category with the big tech firms also have an average price to earnings ratio of 30, which also does not look like a bubble. Where things do start to get a little bit uglier is when we dive into AI implementation stocks. This is Tesla's PE ratio that currently stands at 287, and this is Palantir's that stands at 415. OpenAI is a private company, but it recently went through a round of funding valuing it at $500 billion, despite the fact that the company is losing money, which you could argue makes it infinitely expensive, as investors would never get their money back on their investment if the company stopped growing today. So out of these three, it's quite clear where the bubble is. AI implementation. Investors today are extremely euphoric and willing to pay exorbitant prices to be owners of companies that are implementing AI, and they currently have extreme expectations regarding what these companies can actually do. If these companies fail to meet these extreme expectations, which is quite likely, it would lead to a substantial correction in the price of these stocks. Now, as a percentage of the S&P 500 index, the AI implementation category is actually quite small. Palantir and Tesla represent a negligible fraction of the S&P 500 index. So if the stock prices of these companies drop by 50 to 80%, it would not have much direct impact on the stock market. It could, however, have a massive indirect impact on other categories, especially AI infrastructure that now represents over 20% of the S&P 500 index. As we mentioned earlier, Nvidia alone makes up 8% of the S&P 500 now. Wall Street consensus estimates are currently projecting that Nvidia will grow its earnings by 33% per year over the next 5 years. These are extreme expectations of long-term performance. This means that the company almost needs to quadruple its earnings by 2030 in order to justify the current market expectations of growth. That's going to be tough. In fact, there's a lot that could happen that could derail Nvidia from this kind of growth trajectory. For example, if investors suddenly became less optimistic on AI implementation stocks, that would directly impact the amount of money that is flowing into AI infrastructure spending, like on semiconductors and on data center stocks. So there are many AI-related stocks like Palantir and Nvidia that have such extreme expectations that it makes us doubtful of how much runway they have left in the short term. Lack of runway, however, does not equal imminent collapse. Historically, financial bubbles don't tend to pop on their own, they tend to be popped by the Federal Reserve. This happened with Bitcoin in 2017, with a housing bubble in 2005, and even the tech bubble in 2000. The Fed raised rates in all of these instances. Today, the Fed is lowering interest rates, so we think there is room for the market to get crazier about AI, but it probably won't be with stocks that lack runway like Nvidia and Palantir. New leaders are going to emerge, and we intend on capturing these at bravosresearch.com. Again, if you want to have access to each and every trade that we take on stocks, commodities, cryptocurrencies for a fraction of the standard price, make sure not to miss the Black Friday offer that we are doing right now. You can click the link down below. Thank you for watching.